You are listening to chartingwealth.com for Thursday, the 10th of December 2015, as we continue the march on to end the year. Let's talk about where the markets are. We have been talking about the crossover that occurred several days ago on the 2nd of December and the continued march down of the markets. We continue to see a big slump down in the markets. Now, again, we always start with IYY, which is a total index fund. In other words, it tracks the entire market. What we see happening is a huge down move in the derivative oscillator and a big divergence, that is, the signal line and the MACD, the moving average convergence divergence, which is our big indicator, are moving apart, which means, of course, price action is going in a down direction. Our MACD crossed over the signal line going down, and we're continuing to see that in price. Market was down overall 0.75%. Now, that is almost a full percent of the total market being down for the day. If we look at the 4-hour chart, we can see what happened intraday. Down movement in the morning, followed by down movement in the afternoon. A lot bigger movement, about twice the down movement of the market where it ended up at the end of the day. In other words, the bears pushed the market a lot farther down than the bulls were able to finally pull it up and end it. And we are, of course, confirmed down moves. We saw, this is what's really interesting about this last move down in the market. We saw the IYY, the total market, and the S&P 500 crossover going down at about the same time on both the large chart, that is the 2-day, and the shorter chart, the 4-hour or half-day chart. Now, we're going to go back as I'm reviewing these charts to the 2-day. We're going to look at the SPY. What is that? Well, that's the Standard & Poor 500. It crossed over going down again, just like the bigger chart, the total market did on the 2nd of December. Continued down movement for the last 3 candles, which, of course, we always start with the large chart, which is the 2-day chart. So we've got 3 2-day candles, so 6 days of down movement. And we are in a confirmed down move on the big chart. If we go back and look at what happened intraday on the 4-hour or half-day chart, we can again see lots of down movement in the morning, followed by even more down movement in the afternoon. So again, confirmed down moves on both our large and small charts. Now, lastly, when we go to our final chart when it comes to indexes, we always look at the Qs. What is the Qs? It is the NASDAQ 100. It crossed over going down around the 30th of November. And again, on the 2-day chart, then it sort of slid sideways for a while, but confirmed down moves on this last 2-day candle. Again, we have been in a down move, but it finally moved as the MACD had predicted the market would move. It took it a while. It slid sideways, but if you trusted your charts, they served you well today. Now let's look at what happened intraday. We see on the 4-hour chart, big down moves in the afternoon, and there were down moves in the morning, but huge down moves in the afternoon. The Qs itself was down 1.52%, so over 1.5% for the day. Big down moves in the Qs. The SPY, didn't mention that, was down 0.78%, so about the same amount that the IYY, the total market, was down. Now, lastly, we're going to range back out to our 2-day chart. We're going to look at gold was down 0.19%. It's not yet crossed over on the 2-day chart going up. We have a green candle. Again, remember, it may have been down for the day, but overall on the 2-day chart, it wasn't a down negative on that candle. If we go to our 4-hour chart, we'll see just what happened intraday. Movement up in the morning, movement down in the afternoon. Gold was down 0.19%. So again, about 0.2%. We still have the 4-hour chart moving up, although our 4-hour chart has disappointed us as of late. You've heard me mention that many times since it started fooling us and not working back on the 12th of November. It showed us an up move and then slid sideways and dropped, slid sideways more and dropped, slid sideways more and dropped, and told us twice it would be moving up, and it did not until much later when it did cross over and gave us some accurate prediction on the 3rd of December. Popped up and now it's been sliding sideways again. Once that chart starts working again for us, we'll believe in it, but until then, we won't. That's where the charts are as we ended the day on Wednesday the 9th and as we go into Thursday the 10th of December. We appreciate you listening, watching, wherever it's a podcast or you're tuning into the video or the audio, either one. Thank you so much. Please follow us on Facebook and Twitter, Instagram, and YouTube. And hey, if you do not have our charting layout that we use here every day, the charting layout is laid out the way that we like it with all the indicators that we use and the different settings. If you would like that for free, in addition to our 15-minute how to read a stock chart video, easy to get. Guess how? All you do is you go to chartingwealth.com, you sign up for our newsletter. You will get this broadcast via video every day that the markets are open, along with our weekly review and forecast, and both of those free bonuses. That is the charting layout and how to read a stock chart video. Thanks so much. We'd love to hear from you from chartingwealth.com.